Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot. But before we start talking about the income pick, I want to let you know that anything you hear in this video is for information and educational purposes only. Investing comes with risk. To read more about it, please see the description below. And if you want to read more about what John writes on a regular basis, you could head directly to incomeinvestors.com. While you're there, you could also sign up for some free reports that we offer to our readers, and they get delivered to your inbox. The energy sector continues to be one of the most compelling on Wall Street, and by all accounts, 2024 could be an excellent year for oil and gas stocks like Blackstone Minerals LP, traded on New York Stock Exchange under symbol BSM. And why is that? Record demand on the heels of Saudi Arabia voluntarily production cuts and OPEC members lowered output targets are tightening global oil markets. According to the U.S. Energy Information Administration, or EIA for short, OPEC members will decrease their crude oil production by 0.3 million barrels per day in 2024 compared with this year. This has forced the EIA to significantly boost its expectation for oil prices in 2024. The agency increased its 2024 Brent crude oil forecast by $6.69 to $94.91 and expects West Texas Intermediate crude to average $90.91 per barrel. That's up $7.69 from its September's estimates for 2024. That's going to lead to pain at pumps and increased utility costs, but it's good news for companies like Blackstone Minerals LP. John?
Yeah, thanks, Mo. Houston, Texas-based Blackstone is the largest pure-play oil and gas, mineral, and royalty owners in the U.S., with over 20 million mineral and royalty acres with interests in 41 states. Its positions are held in 60 productive basins, but its highest concentration positions are in the Permian, Haynesville, and Bakken. Now, as a minerals company, it has exposure to oil and gas, but without the hassle of actual operating costs or capital spending requirements. And thanks to its scale, Blackstone has opportunities to partner with operators to initiate or accelerate drilling and directly benefit from their technological advancement, which helps increase recovery and well economics. Now, there's plenty of oil and gas reserves to keep customers happy, though. Estimated proved oil and natural gas reserves at year-end 2022 were 64.1 million barrels of oil equivalent, and that's up 7% from 59.8 million barrels of oil equivalent at the end of 2021.
Oil and gas prices have had a solid run over the past 3 years. How does that impact Blackstone's earnings?
Well, for the second quarter, ended June 2023, Blackstone reported net income of $78.4 million or 35 cents per share. Now, that's down from 131.7 million or 59 per share in the same period last year. Why the big drop? Well, a lot of energy companies reported weaker earnings in the second quarter. During the April to June period of 2022, West Texas Intermediate oil was trading at more than $100 per barrel. In the second quarter of 2023, oil was hovering at around $71 per barrel. On the plus side, it reported distributable cash flow of 103.6 million, which was the fifth consecutive quarter above 100 million. What's also really great is the company's rock-solid balance sheet. It ended the quarter with 81.4 million in cash and zero debt.
And John, I was reading on incomeinvestors.com that Blackstone hiked its quarterly payout by 13%.
Yeah, correct. During the quarter, the partnership's board declared a dividend of 0.475 per unit, and that's up 13% over the 42 cents paid out in the second quarter of 2022. This works out to an annual distribution of $1.90 per unit for a pretty big frothy dividend yield of 10.64%. And now Blackstone actually has a long history of returning cash to equity holders. Over the last 20 years, it returned roughly $3.8 billion to investors through distributions. Now, as an energy stock, Blackstone's quarterly distribution will fluctuate based on supply and demand, but it's been rewarding dividend hogs, having raised its quarterly dividend for 7 of the last 9 quarters. Now, in addition to a growing ultra-high yield dividend, Blackstone also has been rewarding investors with strong share price gains. Currently trading at record levels, Blackstone Minerals stock is up around 14% over the last 3 months, slightly more than 15% year to date, and around 14% year over year.
John, thank you so much for your analysis. Just to recap, Blackstone Minerals is largest pure play oil and gas, mineral, and royalty owners in the U.S. Because of its massive geographic diversity, it has been able to generate serious cash flow, reported strong financial results, and a growing ultra-high yield dividend. In fact, thanks to its strong cash flow, it has been able to reduce its outstanding debt from $394 million in the fourth quarter of 2019 to zero at the start of 2023. Even during the dark days of 2020, it was able to slash its outstanding debt from $388 million in the first quarter of 2020 to $121 million by end of the year. Going forward, look for Blackstone to benefit from sustained recovery in natural gas and ongoing demand for oil. This should help it continue to deliver a solid return on capital and return strong cash flow yields to investors. That's it for today. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.